Hey, what's up, everybody? It is Pete. It is Stocks for Breakfast. It is March 5th, 2020, Thursday. Today, we're going to talk about something that I think is really kind of fun. Today, we're going to discuss how to pick stocks, but not so much which stocks to trade, but the three different methods of scanning to find your list of stocks that are going to go into your game plan that day. And the reason I want to bring this up is because we're kind of all over the place with coronavirus right now. Which stocks should you be trading? Should we be trading long term, short term, short term? First of all, absolutely short term right now because we're going to get to it in a second. Actually, California has actually declared a state of emergency over coronavirus. So I don't want anybody getting blindsided by the fact that we've rallied 2 days in a row and you see all the hype on the talking heads on all the channels and everything and make it feel like everything's gone. Everything's going to go right back to the way it was. Nobody knows what's going on right now. We still haven't got, they're actually saying not to use money right now, if possible, because it could possibly be spread. So I want to make it clear we're still very short term right now. Now, here's something that's super, super important. If you are not a day trader and you're attempting to day trade this current volatility, don't. I just can't express this enough. Prices are moving so fast. They're going back and forth so fast. Average true range has expanded so dramatically right now that what might have been a reasonable $1 stop loss on a day trade a month ago, prior to this, what's going on right now, is probably $3 or $4 right now. So the expansion in average true range, the expansion in volatility, and we'll actually take a look at the VIX in a minute, something I'm surprised I haven't done yet. The expansion in volatility has increased the amount that you have to let risk between your entry point and your potential stop loss. Now, I've done a previous video or as a part of one of my videos that all of that expansion really doesn't make a difference if you take the right share size for the trade. So in other words, you should always be risking a dollar amount first and then calculating the share size as opposed to just trading the same share size all the time. And I bring that up because far too many people only trade the same share size all the time. 500 shares, 1,000 shares, because in their mind they calculate, well, if I moves a dollar, I'll make $1,000, like that kind of thing. That's not the right way to do it. The right way to do it is you pick a dollar amount, then you take your entry point, your stop loss, and that's how you calculate the amount of shares, the distance between the two. So just for argument's sake, if you want to risk $300 per trade and your entry is 20 and your stop loss is 19, that's a dollar you have to let it risk. So that's 300 shares. That's how you would calculate it. I'll follow up with a different video, maybe this weekend. We'll do a little calculation, and we'll put the numbers on the screen so it's very easy. But here's my point. My point is, if if you are not a full-time day trader and you're trying to make indecisions, you're trying to make decisions. You're probably making decisions. If you're trying to make decisions in between doing your regular job and expecting to come out ahead, that's not the smartest thing in the world to do. I just can't express this strongly enough. You do what you do in your full-time job. Let the market settle around what it's going to do. If you're an active swing trader and you really have confidence in your discipline and your strategy, absolutely get involved. There's a lot of opportunity right now over the 1 to 3 day window, but you can see we had a few days we were down 1,200, then we closed up 1,200, up 1,000. Now we're down 450 again today. There's a lot going on. Here's really the point that I want to make. I want to get across. If you're watching this video right now, you obviously have a burning desire to succeed. You obviously want more for yourself, but be smart. This is a black swan event in the market that nobody predicted. Nobody really still doesn't understand when when it's going to end. If you're not a professional trader, be smart and don't take extra risk that you don't really need to do right now. There's going to be plenty of opportunity over your lifetime, and it's kind of also a lesson from my day trading world. Excuse me, some stuff that I taught, especially for new traders. And what would end up happening with new traders is they would freeze during losing trades and take a much bigger loss because they didn't want to admit the trade wasn't working. And the advice that myself and my partner Eric used to give them all the time was, look, there's always tomorrow. Take whatever loss you're supposed to today. If you happen to get stopped out for the day, no big deal. Keep your losses to what they're supposed to be. Keep them manageable. Pick fights in the market that you feel like you have an edge, that you feel you have confidence in because your edge is unfolding, which actually I want to bring up a point about that in a second. I had a good conversation with John yesterday that you should only fight, or I'm using fight as a strong word, but it's kind of a good way to illustrate it. Don't pick fights you don't think you can win. And that means choosing the right stocks. That means choosing when you should trade just as importantly. And here's the conversation finish that I had with John yesterday. It was basically this: the best thing in the world that somebody could tell me that I'm mentoring is I don't see anything today, or I'm having a hard time finding good opportunities. That means that you actually have a strategy. Because if everything looks the same to you, if you can always find something to do, you really don't have an edge. Because quite honestly, every day there isn't something awesome to do. Maybe once or twice we could find some really good opportunities or some trades that we're setting up. Even noticed last week I had a couple of trades where I said there's really nothing lining up today, but watch these levels. Like we were talking about Etsy, which yesterday exploded. Maybe we'll walk through that a little bit as a tracking journal type thing and walk through the trades. But my point is this: you don't have a strategy until you can look at the market some days and say, I'm having a hard time finding something. And that's important because that means that you know what you're looking for. If you know what you're looking for and you want the market, you're forcing the market to only look that way before you accept risk in exchange for what you think will be profit potential. That's when you really understand what you're doing. And that's a great place to get to. So if you like today's video and you find it helpful, there's two things I'd really like to ask you to do. Number one, if you have questions, absolutely write them in the comments below. I will absolutely get back to you as soon as I can. And if you have some other things that you could think that we're not covering yet, because we're trying to keep the stocks for breakfast to stocks in play for that day. But if there's a topic that you feel like you would like to have reviewed or discussed or covered, put it in the comments. I'll absolutely get back to it. And if you find these videos helpful, please click subscribe. That would be awesome. So we're going to go to the charts. The first thing we're going to discuss today is 3 different ways to choose stocks to trade. I'm going to go over all 3. I'm going to show you how I do it, and then I'm going to show you the list of stocks that I actually watch. So we're going to go to the screen right now, and you might have or might not have seen this article on the website. It's actually up here. If you go to the website, you go to Start Here. There's a bunch of articles. It's under listed called Stock Picking. I'll actually put this below the video. But in my experience, there's 3 methods for choosing stocks, and I'm going to just get right into them over here. The first one is scanning technical setups for all major stocks. So that basically means that every single stock that's out there, non-related, you're basically just going to be looking for all the same thing: breakouts, flags, whatever it happens to be. The next one is going to be choosing non-related list of stocks that meet certain volume and price action criteria. Now, I've already discussed, for me, that means an average of 2 million shares per day and an average true range of $1.50 per day. I don't look at any stocks that don't meet that criteria. So I could literally go into the market right now, and without even doing anything, I could look at my scan and I'll knock down 8,000 stocks that will probably turn out to 200, well, maybe even more in this current market, which we'll get into the VIX in a second. But I don't even look at a stock that doesn't meet that criteria, because as I've discussed previously, I want liquidity. So in case the stock doesn't work out, I can get out because there's plenty of shares. I could just boom, hit the bid or hit the offer and get out. Or number 2, average true range means there's opportunity. So just so you know, that's the criteria that I look for. And I'll do a really quick scan. I'll show you in a second. And then the last one is choosing to trade certain sectors and industry. That's kind of a more like a hedge fund type of thing, where you're the oil guy, you're the technology guy, you're the finance woman. There's no downside to doing that, really. The downside is possibly like very similar to doing nothing but trading the futures, where if the market is kind of going sideways and there's not really a lot going on, you kind of feel like your business is shut down because there's not a lot going on. And that can happen with sectors without necessarily having any stocks in play for a couple of weeks, maybe even a month. That's the only downside. But the upside to that, excuse me, is when the sector is on fire, you know it better than anybody, and you should clean up. Excuse me, you should clean up when that happens. So I just want to illustrate this very clearly so that there's no doubts really whatsoever about what I mean by this. So first, we're actually going to talk about Costco has earnings today. We've been discussing Costco quite a bit over the last couple of days, and we keep seeing stories about them being empty, people buying stuff because of coronavirus fears. So you can see it's actually rallying into 52-week highs up here, into coronavirus and into earnings. But here's really the point that I want to get across. Out of all of the stocks, and by the way, you see me have this on the screen all day, every day. I'm not getting. This is just happens to be what I use. I personally use the free version of this. So I know they have a paid version, but I don't use it. I use this only for my scans. So I'm going to go over here and click all, and you can see that there's 7,691 stocks. So I'm going to filter this down now by criteria. First, I'm going to go to stocks just for illustrative purposes here. I'm going to do over $20. So you know that's automatically going to filter this list down, right? Brought it down to $21.99. Now here's really where it gets powerful for all the reasons that I just said. Only 2 million shares per day. Brought it down to 230. And now an average true range of over $1.50, which we said that means from low to high, that it trades an average of $1.50 or more. Yeah, that didn't come up with the price. The price was incorrect. Let's go to $10. A little bit of a delay here. I don't know why. Over $10. And this will probably bring about 150 stocks up, give or take. 277. So the bottom, and actually I'll show you why in a second, why that's so high. Before coronavirus, before the volatility, this number was averaging around 125 a day. So what does that tell you? That more than double the amount of stocks have increased their volatility. So that kind of makes my point from before about about managing your risk. So again, average true range of $1.50, over 2 million. So we basically knocked down from 7,691 potential stocks to be actively trading. I don't even look at patterns. I don't even look at anything until I filter it down for those stocks that match my criteria. Then if you want to take it a step further, we could actually do the change from the open. Actually, let's do change from the close from the downside just to see if there's any relative weakness for stocks that traded against the market yesterday for a potential short sale. So we're actually going to look at stocks that were down 1% yesterday. And that's 1% from the open. That's not 1% from the previous close. That means it's 1% in the candlestick, which means it was a larger red candlestick in a day that the market was strong. So that's a way to identify relative weakness in this case, or relative strength. And you can see actually 40 stocks matched our criteria. But now I'm actually even going to filter it down even more. I only want to look at stocks, and let's see what number that comes out to, because there's inverse ETFs and all of that kind of garbage. I only want to look at stocks. So 40 stocks actually meet the relative weakness criteria. So if we really want to dial this in even more, let's say which of those stocks were below the 50-period moving average to get a feel for whether or not there's bearish order flow in addition to the stock being weak yesterday. And there's still 22 stocks. So what we'd end up doing now is we'd look at this list of 22 stocks on our regular charts, and we would ultimately then say, okay, I'm going to look at those stocks and see if there's room to go, if they're not overextended, and is there an opportunity there. So that's a quick way that I start out my scans. Then obviously you got to go into all of them one at a time and take a look. One of the stocks I want to get into today, that's going to be on my radar today for possibly bottoming out, is Zoom. Actually had earnings yesterday, and you can see they disappointed. It's actually down almost 5%. Because the stock was so strong, you can see where it is right now. This is actually new 52-week highs this week. It only came out last year. Ironically, that's actually how I'm shooting this video, using Zoom right now. I'm going to actually look for it to bottom out over the next couple of days and see if the selling is exaggerated, and if there's a spot to get long the stock again. Again, I want to make it clear, what I'm talking about is looking for a spot over the next few days, not necessarily buying today. But the point I want to make is I personally don't generally trade earnings when they come out. I've done it in the past when I was at my screen and the announcements came out. I just personally found that it was incredibly challenging to feel confident. So I'm always looking at a stock after the earnings come out and then looking to see how that trades from one quarter to the next, because that bias will usually carry through unless new news comes out, and you can really get a nice kind of flow in that stock over a 3-month period until the next earnings comes out. But anyway, I want to get back to something I'd mentioned before very briefly. California declares state of emergency over coronavirus. So don't let the last couple of bullish days lull you back into the roaring bull market that we had. We could just close your eyes and go to sleep. And essentially, this is what's going on this morning. Dow is set to drop 500 points after yesterday. So today's day trade, I'm actually going to come back onto the screen again for a second. I want to make it clear. The trading scenario that I'm going to be looking for today as a day trader. Again, if you're not at your screen all day, I just don't recommend doing this. But you can take some swing trades. But if you happen to be at your screen day trading right now, what I would be looking to do is, because we're pushing down after a few days higher, I'm going to be looking for the opening window, opening range breakout. Now, a lot of the videos I've been talking about trading the opening price, and you can do that when the recent price action is obvious. We had well bid candlesticks the last couple of days. I'm going to go back to the charts and show you the price action that I'm going to be looking for right now. Something that's very important in this kind of tape, especially when you're in a super tight tape. When order flow is obvious and momentum's obvious, so we got clear moves in one direction. We have well bid or well offered candlesticks. The market obviously for a long time was well bid, especially on the weekly charts, meaning higher highs and higher lows. You can afford to confidently buy dips in your stocks. Right now, we're not necessarily that confident in the bias of the market right now. So I'm a little bit more inclined to force price action to be moving in my favor before I'm looking to put a position on. And I'm going to go back to the charts and show you what that means on an intraday chart, using yesterday's charts as an example for what I'm looking for today. So we're going to shoot right over to the charts. Actually, what I'm going to do first is take a look at the futures. We've been doing that the last few days, and I'm going to zoom it down to see where we are. So this is where we are yesterday. We closed, where's yesterday's close? Right about up here, give or take. That was yesterday's close. You can see we actually followed through a little bit, and that's where we are right now. So you can see we're actually selling off overnight. So you got some pretty significant levels to get through to get back to where we were today. So if I'm looking for an aggressive position where I feel like the buyers step back in, I'd probably be looking up at this 3,100 area in the futures. If we continue to trade down and below that number, I'd probably be a little bit less aggressive because of how much buying we've had over the last couple of days. But I'm going to digress and go back a little bit. What I'm going to do now is I'm going to keep using, you know what, I'm going to use the SPY because that's a pretty easy one to explain. I'm going to remove this so it's not kind of in the way of the chart, just for illustrative purposes here. We'll be able to see what I'm looking at up here in the corner. So basically what I want to do is I want to use the opening price range, which is the opening 15-minute candlestick, the opening 15-minute high to low. That's the easiest way to explain it, but it's really the opening candlestick. So you can see we're on a 15-minute chart. I'm just going to hold this down here as well. So that's the opening range yesterday in the SPY, which let's just essentially call that the market. There's the low, there's the high. You can see basically until 12:45 in the afternoon. The 12:45 candle, we didn't get out of the opening range with any sort of conviction. So remember before in the beginning of the video, I'm actually just going to come back here in a second. Remember before in the beginning of the video where I said if everything looks the same to you, you don't have a strategy. And if you start saying I can't find something to do, that means you're getting closer to really making that leap from chart reader to tape reader, which means you're starting to really be a trader. You can see here in the SPY, we dipped below it a little bit, came right back in, tried to test it on the top, came right back in, and I'm going to go to the chart again. Essentially what I'm trying to get across here is for all of the we closed here the previous day, opened here, so the market was up monstrous that day, but this is what I'm going to be looking for today. I'm going to be drawing the opening range in all of my favorite stocks, and I'm going to let it get out of the opening range before I start to look for a position, because essentially what that means is that's the right price right now. And the reason I use the 15-minute window is that it's tight enough usually where if it breaks out, we can start trending, but it's wide enough that you can see the noise so super clearly here that it's easy to tell if there is or isn't something to do. So again, I'll just pop in a different stock. Let's just go to Netflix for argument's sake. Here is the opening price in Netflix. I'm just going to draw it so we have a good example. Now, Netflix is actually a little bit different because in Netflix, if we go to the daily charts really quick, we know that Netflix is this longer term line here. This is a significant breakout level. So you can see that that blue line is a level that we're waiting for the stock to break out. So here's kind of an interesting thing. You can see that Netflix was actually trading below the opening price, but we had a bullish bias coming into the day. So there was nothing to do while it was below there because we knew we were looking for a bullish opportunity. And the reason I like this so much is that it actually finally pops through, but there's no profit potential. I mean, it's relative. It is $6. The volatility is really starting to get to you, right? There is room to go, but you have to be aware that that's all there is to go. So wherever you ended up entering this stock, you would not have been on the short side. You would not have been looking for a short at all. Here's the kind of the Mendoza line where we're saying if it gets above there, we feel confident now. Today's order flow is matching the longer term. We know where the profit potential is. So in this case here, we might have dropped down to the 5 and looked for an opportunity. And this candlestick close above there would have been the opportunity. I'm not day trading now because I'm waiting for it to get above here and close there, which it actually did yesterday. And it looks like it's going to open flat. But this entry stick would have been here. What's kind of cool here as an illustration as well, we know that we had the opportunity here. The entry here was 378.50 with a potential up to 383, so plenty of opportunity there. And how awesome is this? Resistance, 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 resistance for knowing your levels. But what's kind of cool here is this candlestick here kind of gave it a inside candlestick breakout entry to the upside. One you would not have taken because that was basically a one-to-one risk reward with your bigger levels there. So that's basically what I'm going to be looking for in most of the charts today. We have Costco earnings today, looking at Zoom over the next few days. But what I want to do is I'm just going to go over a couple of more popular charts just to really drill this point home. So we know that Tesla long-term is bullish. So there is the opening price in Tesla. So again, how ridiculously clear is this once you start drawing these out, if there is anything to do at all. So I'm going to clone that and now bring in the other side of the trading range. So there is the opening window in Tesla. So not only was it below the opening price and below this opening window all day, but it never, ever traded up here. So nothing to look for in Tesla yesterday. And think about that. Think about how just something as simple as that keeps you out of trades you shouldn't be in the first place like that. Now, I want to get off the daily charts and I want to illustrate this on a little bit higher time frame because this is really where we could really, really drill this point home. I'm going to go out because a lot of people don't day trade. And as I said before, right now is not really the best day trading environment if you're not at your screen. I'm going to go to the weekly charts. And what I'm going to talk about now in Tesla from a swing trading perspective is we're going to draw the Monday. Actually, I'm going to go to here. I'm going to go to, I'm going to use Monday as an example. So here is, let's see, Wednesday, Tuesday, Monday. So here is Monday's price action. If we're going to use daily candlesticks the same way that we would to look for swing trades, this is the price action of Tesla on Monday. So we would say Monday is our opening range. So if you want to hold the stock for a week, if you want to just be in a trade Monday through Friday and look for opportunities Monday through Friday, you would draw Monday's window. First, you would have Monday's open. So you can see we're above Monday's open the entire time. Then you would have Monday's trading range. So if you really wanted to drill this home and look at opportunities, I'm using this probably not the greatest example because of how wide the stock's trading right now. Maybe we'll go to a different stock just to illustrate it. But as long as it's outside of this window, and above the opening price for the week. So again, this is Monday, Tuesday, Wednesday's price action. Then you would be looking for opportunities to be long. Maybe here you have an inside candlestick looking for an inside candlestick breakout in the direction of the order flow for this week. So very similar to the opening range and opening window, opening price for during the week, we can do the same thing on much longer time frames. So let me actually use Micron here. This might be a little bit better example, which it actually is. So here's Monday in Micron. There's the high. And here's the low. So you can see that we keep bouncing out of it, and coming back in. So right here, what you would be illustrating is that price is having a hard time getting out of between 52 and 60, basically. Maybe a little bit higher than 60. So I'd be forcing, there really wouldn't be a trade in here this week because maybe I might have shorted this, but why would you short it? Well, the market's exploding. Good, keeping the market in your window as well. But you can set up the same exact way. So my point is, if I'm looking at this stock and you can see here the list of stocks that I trade every day, I wouldn't be doing anything in this stock. I would literally, if we were trading on my floor together, I'd be saying the stock's stuck between 52 and 60. I'm setting an alarm for 60.50. and I'm setting an alarm for 51.50, and I'm not doing anything until it gets out of there, because for this week, those are the levels. They could reset next week. Simple as that. All right, so those were the biggest things that I wanted to cover today. Again, I'll post the link for that, how to pick stocks, the 3 different ways below the video. If you have any questions, absolutely feel free to shoot a message below. I'll get back to you as soon as I can. If you like it, give us a thumbs up. I'll give it right back to you. So that's Stocks for Breakfast, March 5th on Thursday. Be disciplined, plenty of opportunity in the market. If what I discussed before about how many shares you're supposed to trade is new to you, definitely go back and watch that. And I will definitely shoot a video only on that topic this weekend, because I think how much share size you should take in this market is an incredibly important topic. And you know what? I'm actually going to come back to the screen just for one last thing, something that we should all be paying attention to, which is the VIX. If you're not familiar with the VIX, it's the fear index. And we're going to go out to the daily chart. This is what the VIX has done. Pretty much nothing for months. And then the coronavirus exploded. The volatility index exploded, which means fear in the market. It's a huge options trading thing, but we can use it as stock traders to identify when we should be adjusting our share size for the same dollar amount that we would risk per trade. So that's Stocks for Breakfast today, March 5th. Have an awesome day, and I will speak to you soon. Thank you.